Well, all that and lots more coming up on the big picture tonight, but on to our big spotlight then for this evening. Yatra.com is all set to make its debut on Wall Street. It has entered into an agreement with the Nasdaq-listed Terrapin 3 Acquisition Corp in a deal that values Yatra at $218 million, about 1458 crore rupees. I caught up earlier today with the founder, Dhruv Shringi, and asked him about the details of that deal and also the plans for the company at this stage. In fact, I also spoke a lot to him about, the space where startups are being questioned over their valuation and whether it's the startups or whether even investors are to be blamed for that. Take a listen. Congratulations on this announcement. Take us through it. I mean, what do we so it's Terrapin, and you have decided now to merge.
That's right. Yeah. So this is an innovative way of going public. Terrapin is an already existing entity which is listed on the Nasdaq. What we are looking at is a combination between Terrapin and Yatra, where Terrapin will merge with Yatra's parent company in Cayman Islands, and through a filing of a proxy statement and other documents with the SEC, Yatra's parent company will become the listed entity on Nasdaq and trade under the ticker YTRA.
So when do we see then Yatra
the transition happening? We expect this to be about a 90-day kind of a process. So hopefully sometime in October, you should see Yatra starting to list.
So how important is that in terms of a milestone for Yatra? It's 10 years, incidentally.
Absolutely, yeah. We complete 10 years on 1st of August since we went live. For us, it's a very critical milestone. See, in any company's life cycle, you go through different stages. And I think we are now at that stage where this is a validation of the business that we've built, and it's a validation at the hands of the public market, which is the ultimate validation, right? So it's a very important milestone for us. It's not the end of the journey. It's actually the start of a beautiful another, new journey for us.
What does Yatra now gain with this?
Sure. So Yatra ends up with a very well capitalized balance sheet. As part of this transaction, we'll end up in a scenario where we will have at least $100 million going up to maybe about $150 million onto our balance sheet. And that strengthened balance sheet then gives us the opportunity to continue to grow the business. We've seen very strong tailwinds behind the aviation sector. Domestic air travel and international air travel both continue to grow at a very rapid click. This will allow us to go deeper into the Indian market, right? So tier 2, tier 3 towns, look at them. We also are building a technology platform which can be used across all segments, so be it consumers, direct consumers, be it corporate travelers, be it B2B agents. So we want to strengthen that platform and make sure it can be used across as many channels as possible. Yeah.
Is there a reason why you've made this announcement? Because it comes in at a time when the new aviation policy is also clear. So is there a causality between the two?
There isn't really a direct causality between the two, but I think this transaction which has happened, this combination which has happened, has got a lot more support on account of the tailwinds that we are seeing in the aviation sector, right? We've seen airlines adding more capacity, adding more aircraft. We are seeing the government introducing a much more consumer-friendly policy, and also a policy which is looking at significantly expanding the infrastructure. Right? There is talk of enabling a lot more tier 2, tier 3 towns with airports, putting in new connectivity, also looking at having smaller aircrafts coming into play. So I think we are at the cusp of air travel in India, right, going through an inflection. It went through one inflection back in 2006-07 when Air Deccan came about, right? And I think we are now at the second stage of that. And we want to make sure that we are adequately capitalized to be able to take advantage of it.
But you do believe that the aviation policy, is going to kind of, we're going to see a sort of an uptick in the aviation market.
Absolutely.
And with this combination, you'll be able to, you're sort of better positioned
to take advantage of it, right? And also, then there are other segments we are seeing, from a more macro trend. You're seeing large amounts of spend happening from consumers on travel, both international and domestic. The number of leisure travel customers are growing rather at like 20+% at the moment from an industry standpoint, right? So from a company standpoint, it gives us a great opportunity again to get deeper into that segment, build out our franchise into that customer base.
All right. Also tell us now, will there be any change in the management structure following your announcement with Terrapin, considering the fact that you will be now, Yatra will now be the face of that merged entity, even on NASDAQ. So,
so from an operating perspective, nothing will change. The management team that is in place right now will continue to run the business. We will have an expanded board, and we will have a few people from Terrapin who will come onto the expanded board. But apart from that, it's business as usual.
Right. A couple of last questions.
Sure.
And it's been a decade now since since Yatra actually came into being.
Right.
So what's been the overall journey like? Because in the middle we've seen ups and downs in Yatra's fortunes, also because of Kingfisher Airlines being. So just talk us through.
Sure. Our business, I think, when we really reflect on it, has been through very distinct phases, right? The first phase was a phase of rapid growth, started in 2006, and the markets were very kind to us, right? They took to online travel and took to Yatra.com in a jiffy. Our business scaled up tremendously, and we thought nothing could ever go wrong, right? And then in 2012, when we were actually contemplating a public exit, Kingfisher ended up collapsing, and that led to a phase, actually that coincided with fuel prices also going up. So it led to a phase of slowdown in the domestic aviation sector. That's the time that we really had to struggle and rebuild our business. We made the acquisition of Travel Guru, that became our entry into the hotel segment. Right. We ended up making some other smaller acquisitions like Buzz in Town to make sure that we can expand our revenue base. Till that point in time, pretty much 90% plus of our revenue came from domestic flights, and today that number is hovering somewhere in the early 40s. So there is a significant change in our own revenue mix and business mix that's come about over the course of the last few years. Post the Kingfisher phase, I think the business went through a very tough time. It took us literally 2.5 years to rebuild the business. And it's only towards the middle of 2014 that we started seeing the benefits of the hard work that we put in between 2012 and 2014 to start bearing fruit. And then we've had a phase of fairly good growth in the last 2 years, on the back of which this transactions happened.
Many might even wonder that, considering the fact that you've gone in for a NASDAQ listing, is this perhaps a sort of a prelude to perhaps looking at hitting the Indian IPO markets anytime?
I think from an Indian market perspective point of view, we've contemplated that in the last maybe 6-8 months. But what we've realized is that for the sector that we are in, the Indian market still does not really have enough depth of peers. So when you look at really building a stock out, you want to make sure there's a large amount of analyst coverage, you want to make sure there's a large amount of trading happening in other similar stocks, and that today is only available on the NASDAQ. So for relatively newer business models, I think that is the only exchange that offers you the opportunity to be out there and have a lot of peers that you can compare against and have a lot of analyst coverage.
But you were contemplating at 6
That's right. We did contemplate the India opportunity, but I think in the end we decided that it was better to be in a market or on an exchange like NASDAQ, where you've got greater chances of liquidity coming through.
So at least that India plan is on hold as of now.
That's right. So also from a capitalization point of view, we will be adequately capitalized right now. I don't foresee a need for near-term capitalization again, right? So I don't think in the near term we'd contemplate an India listing at all.
Finally then, especially at a time when when there's a buzz about the unicorns in the startup space, and there are now questions about, how viable are they? Their businesses are growing, but are they making money? So in that sense, do you feel that, you're obviously looked upon as one of the icons in this space. How do you look at this debate that's sort of panning out?
I think the market maybe went ahead of itself during that phase of about 2 years, and with so much capital flowing through, we've seen entrepreneurs get a little misguided. I think, when you've got so much access to capital at such a cheap cost, it is very easy for you to go out and spend.
You all had it much tougher.
We've been through a much tougher time, right? And I think, that's what focuses you on truly building a business that will outlast a lot of these cycles. At the end of the day, you need to think truly about the fundamentals of the business and think about, are you making money on that transaction, right? You need to have a path at least, right? I'm not saying for a minute that, companies cannot be unprofitable in the initial years, but you need to have a clear path. You cannot be in a scenario where companies are building businesses on negative unit economics. That will never really flip. That means the more you sell, the more you lose, right? And somehow people started believing that was the right thing to do. And
There's
one
no
of the other
substitute
things
for
on
making
which,
money.
no, I don't think so at all. I think, plus I also to a certain extent feel that the investors who are fueling this growth did a bit of injustice to these young founders. They should have supported them a lot more. They were much more savvier than the founders themselves. They've seen these cycles many times, and they should have taken into account the macros of India, right, before really getting people to spend like this. See, when you look at from a macro point of view, we are still at maybe about $1,700-1,800 of per capita GDP, right? It's not really the per capita GDP level which will give you China kind of disposable income. Right, and that's a very fundamental difference when people compare India and China. Yes, we've got now almost 250, 300 million mobile internet users, right? But at the end of the day, the consumption power that they have for disposable stuff is still very limited. So I think we need to take that into account. It's only once you get to a $2,100, $2,200 kind of per capita GDP level, which I think is maybe another 2 years away, will you start seeing inflection in consumer spending happening.
So in a sense, even the investors have been a little...
Absolutely. I think they have an equal role to play in this, right?
Right.
And when I just reflect back on that from ourselves, we are grateful that we've had, more, investors who've guided us through some of these times. Right? You have to focus on building a longer-term business.
And how things change. Your firm is just 10 years old.
Right.
And it almost sounds like a generation.
Absolutely.
Dhruv, it's a pleasure.
No, pleasure's mine.
Congratulations and happy birthday to you.
Thank you so much.
Thank you so much. Thanks.
Cheers.